We have Manish Sonthalia now joining us, Chief Investment Officer at Emkay Investment Managers. Manish, good to have you with us here on the program. It's been a while. Thank you for your time. You've been bullish, straight up bullish about prospects for the market, Manish. Even when we've spoken, when we had a bit of red in the screen, we were going through a bit of a down phase, and it's paid off. But tell us now, Manish, where are things at? And are you as sure about the fact that from here you'll make one will make a lot of money through to the end of the year? I'm not talking about the long term. Long term, of course, is the long term. I'm talking about, say, by the end of 2024. Go on.
So the same story continues, Prashant. It's a buy on dips. There is tremendous amount of flows that is coming into the markets. There is a bit of caution because valuations are not very conducive. Roughly around 25% of the entire market is worthwhile buying from a point of view of valuation. It's a pick and choose market. All of that is staged. But having said that, I think the caution will come around the time when you go through the fourth quarter. After the U.S. elections are done with, you have new stocks coming into the F&O segment. All of that will lead to some sort of a volatility. We are stretched on headline numbers as far as benchmark valuations are concerned. There's no doubt about it. Can it extend even further? It can due to flows, but I think one should tread with caution.
Okay, Manish, hi, morning. So the challenge is that what do you buy at the dip? Because the dip tends to be very, very shallow in this market. For what it's worth, if you get some time correction, that's pretty much what you have to take. So there is some chatter on sector rotation, and sort of some fund managers we speak to are saying that it's time to maybe unload a little bit from defense, railways, and capex and look elsewhere. Do you subscribe to that view? And if yes, what is the portfolio churn that you would advise right now?
Well, I think the stance is to make the portfolio a little bit more defensive, take some beta off the table. I think financials is one area to hide. There's ample margin of safety out here. There is an IT, there is a pharma. These are three sectors, and within that, individual stocks will have their own say. But these are the three sectors to basically go overweight on. And the ones to go underweight or slightly equal weight is basically your capital goods, railways, defense. I mean, they can go through some serious time correction, price correction. And some of the names which are potential inclusions in the F&O, and they are trading at some very lofty valuations. And we know all those names, and all this while, because there were no short selling allowed, you could not short sell, there was no price discovery in these sort of stocks. But right now, when you have these sort of stocks come into the F&O, you could see some serious price damage in some of the names which are trading highly illiquid, first of all that, and secondly, at very elevated valuations. You could somehow make out that these prices are controlled in some way or the other, but now you would have an option to short sell. So these are the areas where you could see some serious price damage, and which will lead to a better price discovery. Otherwise, valuations are full in almost all sectors, but some sectors to hide would be your financials, IT, and pharma.
All right. Hi, Manish. Good morning. Good to see you. When, those stocks that could potentially come into the Nifty, the list is, I think, Zomato is one of those names. Avenue Supermarts is another one that could potentially come in. And Geo Financial, based on the changes in the F&O, they come into the F&O market first and then to the Nifty. So you'll be a little bit cautious on all these three names?
So I think, fundamentals will definitely play a role. It is basically where the growth is going to come and how much of a growth is going to come. If it is priced way beyond comprehension, then obviously it's a no-brainer. I don't want to take specific names, but specifically Zomato, which we own, I think the street will get surprised on numbers on FY26, 27, and even 28, so to speak. So I don't think really that, this is one name where you have a case of an overvaluation. This whole quick commerce thing is tripling of dark stores by FY26. I mean, it's yet to play out. So We are owners of that name. Not that I'm specifically recommending this name to anybody, but we think that the numbers that are going to come for 26, 27, 28 are going to surprise on the positive side. We remain invested. That's not too much of a damage. But the other two names I don't want to comment. But suffice it to say, it is more to do with valuations and number.
Got it. All right. Manish, let's talk about another space that's virtually done nothing in the last year or 18 months, the paint space. Asian Paints, Berger, Kansai, all of them were worried that there was a big new entrant that is coming in there. Now it seems like they have a couple of tailwinds because the new entrant has come. The impact is not that much. Crude oil prices have cooled up, which will help them with their gross margins in Q3 as well as in Q4. And there have been price increases. And we just had a large trade when a crore shares of Indigo Paints got picked up in a flash. Your view on the paint segment, do you think it's set to paint it a better picture, say by FY26 or the second half of FY25?
So the entire building material space, right from cement, etc., has been going slow ever since the announcement of elections were there. Now that we are through with the elections, you have the new finance bill gets signed and assented by the president. A whole lot of funds getting allocated to the housing sector, road sector, infrastructure. And obviously, if housing gets a fillip due to fund allocation, Awas Yojana and all of that, then the building materials itself will go through an uptake. And added to that, so we're talking about volume growth out here. And three dominant players, now you have a fourth one. Everybody should see a tailwind in terms of the sector. But margins is a fillip that paints would see because of decline in crude oil prices. That will come with a lag. But I think the paint sector is due for some revival, because it has really not done anything, so to speak, fear of competition. But I think most of the negatives are there in the price. Second half of fiscal 25, first half of fiscal 26, the entire building material space, and specifically to your question, even the paint sector is likely to do well.
Okay, so an eye on paints, got that. Manish, we discussed quick commerce. I mean, the market is usually looking at any of the new age businesses or tech-related businesses with a lot of anticipation, right? EV is one such thing. We saw what happened with the Ola electric IPO yesterday. And Ease My Trip said that they'll make EV buses a stock shot through the roof. So just give us your sense on this whole EV thing, the way the market's interpreting it, because Ola then corrected also quite a bit after doubling from the IPO level. So what do you think of EV? And then on the other side is the whole semiconductor play, where companies like Keynes and CG Power, they're setting up these semiconductor units. So purely from a stock and investing standpoint, do they still make sense for you?
I mean, the entire EV space and the semicon space, there's a long way to go. We were at conferences throughout the last week, and TSMC was deliberating out here, and other dignitaries from the semicon industry, EV space, etc. But I think the euphoria that is built in both these spaces, are something beyond comprehension. There's a long way to go. Yes, the big macro picture is pretty much okay. But as far as the EV battery is concerned, we are still importing cells and assembling. Really don't have a make in India battery as such just yet. ICE is making a comeback. There's no subsidies that is about to come in the EV space. The environment is quite headwinded, and the valuations at which some of these companies are trading beyond comprehension. Semicon space, again, the outlook remains good from a top-down perspective, but if you zero in on numbers, again, valuations are extremely frothy and euphoric. Just don't, justify the valuations. You alluded to some names, but I would be a total avoidant. Both these spaces.
Okay, so, a word of caution there, and probably worth keeping this in mind. Investors do tend to carry away when you have these big sunrise sectors, right? Before we let you go, this is an important development. Let's pull up Vodafone Idea. The stock is sliding as we speak. It's down 7.5%. Volumes are picking up as well. We want to go back to the Goldman Sachs note. Remember, Rima just alerted us the target that Goldman has put on VI is, if I'm saying it right, ₹2.50. That's the target. They're saying it's an out-and-out sell. The reason being that The recent capital raise is incrementally positive, but it is unlikely to be adequate to stop the market share erosion. They're forecasting another 300 basis points market share erosion, therefore that call. So it's a big call. They're saying 2 rupees 50 paise on the stock. The stock is sliding. Prashant, maybe you want to come in, and then just a final view on Telecom with Manish as well before we let him go.
I'm just saying that, who won't be happy? Very unhappy, actually. Government of India, with that note.
Yeah.
I mean, they put in money. They
Exactly.
put money at 10 rupees.
Yeah.
I think, and of course, it's of course a view, and we'll see what happens finally. But I think the reason why the stock is also reacting in such a way is because we've not, generally speaking, commentary ever since there was repair which started to happen, when the promoters put in money and the government, of course, government put in money before that. Generally, the view and from the street has been pretty constructive that, the curative petition is around the corner. And more stuff is going to happen, which incrementally is going to be positive. And then, you get a call like this, which kind of basically says, even with all of this, it's going to be very difficult for Vodafone Idea to, gain share and gain the share of as a profit market share in any meaningful way. I think that is causing a bit of hurt. I don't think it's anything new as well. I mean, whenever we speak with analysts, everyone has pretty much acknowledged that it's going to be hard. It's no one's case that it's going to be easy. It's just that it's coming in from Goldman Sachs, and they're putting it out there right now.
Just one more point I wanted to add, because the numbers they've given are so definitive. Maybe that's why the market's really sitting up and taking note. Goldman is saying that Vodafone Idea will have to hike ARPU by 200 to 270 rupees. That's the kind of ARPU increase that will be required if this company is to remain free cash flow neutral. So clearly, I mean, that sounds near impossible to have that kind of an ARPU increase. And those are the concerns that are playing out on the stock. Remember, there was this curative plea as well that was going to go to perhaps resolve some of the pending dues, but we haven't heard the final word on that from the Supreme Court as yet. Anyway, we've gone on for a good bit, so let's take final thoughts with Manish as well. Manish, Telecom, I don't know your views on Vodafone, whether they're as dire, but tell us if you're buying the other incumbents, Jio in the form of Reliance or Bharti.
Yeah, both of them. So we have both of them, but obviously Vodafone is a total avoid. A lot of assumptions built into Vodafone's progress and success, so to speak. First of all, the curative petition, forgiving of the dues due to the government. Then you will have at least 2 rate hikes or tariff hikes that is required for it to come into a sustainably, a black sort of a situation in the P&L. And thirdly, valuation. 10 to 12 times EV to EBITDA 2 years forward is the best that you can give to a telecom company. It's more of a utility. So, I mean, the valuation don't justify anything out there. So, but we own Bharti and Reliance.
Okay.
All right. Manish, thank you very much for joining us. Good speaking with you. Thank you for taking out the time.